Check, check.
I was tending the business. It'll all be, we're all gonna stand. I'm in.
Either way,
I learned that lesson.
there's two ways.
Hit the house. Check this. Check.
Almost 22 years.
After 2 years, I was about to have to hang up again.
Yeah, but do you have the hang of Oracle?
No, I don't. My son's an electrician. He called me. What happened?
Is JC absent today?
Yeah, he's on that federal grand jury. And normally he just goes on Wednesdays. But
Do you know if Shree's here today? Or, okay,
he'll come in about 10 minutes later. Yeah, he's on
with his kid.
grand jury duty.
So JC won't be here and we don't know about Shree.
He said his son got shot. He's like, electrician work. Touched some wires that got shut off. Shocked him and knocked him
When,
off the
just
ladder
now?
this morning. He's at the hospital.
God, I hate that. That sure lets you know, doesn't it?
Yeah, it does.
Well, good morning, everyone. It's 10 o'clock, so we will call the August 8th, 2024 meeting of the Oklahoma City Employee Retirement System to order. Item number 2 on our agenda is a resolution of appreciation for Ken Culver Jr. for his dedicated service on the Oklahoma City Employee Retirement System Board of Trustees. So I'm going to head down, and I'm going to join Ken out front. Come on up here, Ken. If I can get out. Come on up here. Okay, we'll ask Secretary to read the resolution of appreciation.
Resolution of appreciation for Ken Culver Jr. Whereas the Oklahoma City Employee Retirement System, OSERS, and the Board of Trustees was established by Ordinance Number 8169 in January 1958 and was tasked with administering the retirement fund. And whereas the Oklahoma City Municipal Code states 3 members of the Oklahoma City Employee Retirement System shall be appointed by the City Council who are residents of Oklahoma City and demonstrate professional experience in investment or funds management, public fund management, or private pension fund management. And whereas Ken Culver Jr. was appointed as a trustee of the Oklahoma City Employee Retirement System in November of 2002. And whereas Ken was elected to serve as vice chair of the Oklahoma City Employee Retirement Board of Trustees in 2004. And whereas Ken has demonstrated professional experience as a certified pension consultant and is a certified accredited investment fiduciary. And whereas Ken was a conscientious fiduciary to the Oklahoma City Employee Retirement System and Oklahoma City Employees Pension Fund for over 21 years of dedicated volunteer service. And whereas Ken has always been dedicated to the sound management of the system to ensure that city employees have a sustainable retirement and are well served. And now therefore be it resolved by the trustees of the Oklahoma City Employee Retirement System that they do hereby recognize that the contributions of Ken Culver Jr. and thank him for his professionalism, leadership, dedication, and guidance during his 21 years of service to the Oklahoma City Employee Retirement System.
Okay, with that, Chair will entertain a motion to adopt the resolution. We have a motion and a second. Please record your vote. I vote yes. All right. Approved unanimously. How about that? Okay. Well, Ken, here's your resolution. It has been an honor and a privilege and a pleasure over the last, I couldn't believe it was 21 years, but that's what it says, so I'm going to go with that. Anyone else on the board want to make any comments, only kind comments?
I would just like to thank Ken for his service, and knowing that he was an expert, I always know when Ken talked up here, I listened very intently because I knew wisdom was coming out of his mouth. And so thank you for your service. Thank you for your guidance and over the years, and it's much, much appreciated.
Chairman, if I could, Ken, I just thank you. You were such an incredible warm welcome when I joined the organization a little over 4 years ago. But your knowledge, your experience, and your kindness has been something that I've always valued about you. And so it's just been an honor serving with you. And we congratulate you again for your time with us. Thank you.
Ken, I just want to say it's been a pleasure and an honor serving with you, and thank you for all your service and all your years. You've been a joy and an inspiration. So.
Anybody else? Okay. Well, Ken, now it's your turn. I'll give you the mic.
I feel like I'm a gold medal winner, and it's just a Star Spangled Banner playing up here. I thank you very much. I have mentioned it in my resignation letter. By the way, I'm doing it for health reasons. That I really appreciate the professional manner in which these meetings have taken place. And what I really have been pleasantly surprised is for those employees that are employed by the city of their professionalism, how well they do things, and how proud I am to be a citizen of Oklahoma City. Thank you very much.
All right, Ken. Thank you. For a number of years now, I've been going down to the OU Texas football game in Dallas, and not recently, but there was a string of years, 2, 3, 4 years in a row where we'd go out to eat after the game, and for like 2 or 3 of those years in a row, I would see Ken at the same restaurant. I was like, Ken, are you following me? But that was always fun. Hopefully it was after a win, because dinner was much better after a win, I'm sure. So Anyway, Ken, thank you so much. I mean, it's been an honor, and you've done a great job. You've been, you've been a constant over there on the right side of the horseshoe, and that's what we need in a body like this, folks that are willing to show up on a volunteer basis, and you're the epitome of that. So thank you again. Okay, moving right along, we are on number 3 of the agenda, or item 3 rather. Let's approve the minutes of the July 11th, 2024 meeting. We have a motion and a second. Please record your votes. Item is approved. Item number 4 is the consent docket. We have 2 items which we can take with one motion. I have a motion and a second. Please record your vote. Item is approved. Okay. I'm trying to get my screen down there. There we go. Okay, item 5 is to ratify approvals. We have several items, but we can approve those with one motion. I have a motion and a second. Please record your vote. Item is approved. Item 6 is to approve the claims docket. We have a motion and a second. Please record your vote. Item is approved. Item 7 is to approve the following applications for service retirement. We have a motion and a second. Please record your vote. Item is approved. Item 8, receive report of death, authorize payment of the $5,000 death benefit, and authorize secretary to make necessary changes to conform on the following. We have a motion and a second. Please record your vote. Item is approved. Okay. Sorry, I'm scrolling up here, folks. Item 9 is receive report of death, authorize secretary to make necessary changes to conform on the following. I have a motion and a second. Please record your vote. Item is approved. Item 10, approve the following applications of vested rights. I have a motion and a second. Please record your vote. Item is approved. Item 11, approve request of the following to terminate vested rights and commence retirement benefits. I have a motion and a second. Please record your vote. Item is approved. Okay, item 12 is items for individual consideration. Item 12A1 is receive a presentation from Angela Jones or their representative concerning their application for disability in the line of duty allowance as permitted under, I can't read, what's it say? Under the disability allowance provisions of the Oklahoma City Municipal Code as amended. I do not see Ms. Jones in the audience this morning, so we will move to item 12A2, which is enter into executive session with the municipal councilors to discuss the application of disability in the line of duty, because public disclosure of certain health-related information will be discussed would violate confidentiality requirements of the state and federal law. So we need to have a motion okay, so Chair will entertain a motion on item 12A2 to enter into executive session. Have a motion and a second. Please record your vote. Item is approved. Now, what we'll do, we'll finish the rest of the agenda, and then we'll adjourn. We'll enter into executive session, and then we'll come back. We'll recess, and then we can come back. So let's move ahead to item 13, or actually item 12B, which is approve the ERS pay plan retroactive to July 1st, 2024. Have a motion and a second. Please record your vote. Item is approved. Item C, approve sending Gina Jordan to the International Foundation of Employee Benefit Plans Annual Conference, November 10th through 13th at San Diego, California. I have a motion and a second. Please record your vote. Item is approved. Okay, item 13 is to receive the investment consultant report. Good morning, Jason.
Good morning. So I have the monthly report, and I'm going to touch on a few things in the quarter report this morning as well, but we'll start here. So a lot has happened since I was here in July. If I came on the 1st, I could have talked about a lot of good things that happened in the month of July, but now I'm here on the 8th, and we've had some more volatility in the markets. But as you'll see here on the monthly snapshot, small cap stocks, which have really lagged the market for some time now, best performing asset class in the month, up 10% in the month of July alone. Really rallying on the back of expectations for the Fed lowering interest rates as inflation numbers were coming in lower in the month of July. Employment numbers still looked okay in July. So with the expectations of a softer landing, we started to see a rotation in July into small cap outperforming and value outperforming. So you see that on the month, we don't have a value index on there, but it certainly was appearing in the indices. That said, on Friday, jobs report came in and it was worse than expected. Fewer new jobs being created. In addition to that, we started to see an unwinding of what is called a carry trade. Japan has had basically zero rates for 20 years. Japan's central bank announced the increase of their interest rate on their short-term debt by 25 basis points. There's been a lot of trading in the markets where investors are borrowing yen, investing in something else. So when they raised rates, a lot of investors had to unwind those trades, and we saw a massive sell-off. That, coupled with a bad jobs report and some other volatility in the market, has caused the beginning of August to look pretty treacherous. The expectations, we're showing expectations on Fed rate cuts in September down here on the bottom right. This was at the end of, this was in July. So the dotted green line is the number of expected rate cuts and when, but the percentage of investors expecting a rate cut had gone up in July, and it was about a 50% expectation for a rate cut in September. That expectation as of Monday was up to about 80%. expectation for a rate cut, and the amount of that rate cut is potentially a little bit higher. Which way, what happens mid-September is still probably a good guess. We've seen a little bit of a rally the last few days, but just to put this in perspective, you see that 10% rally in small cap in the month of July. Month to date through the first really 7 days of August, small cap is down 9.7%, so basically given all of that back. As we look at your portfolio, the asset allocation on the next page, we've made some headways in moving toward the new target asset allocation. In the last month, there was a question about the significant overweight in equities. As you'll recall, at the beginning of the year, we lowered the target allocation in equities from 65 to 60 and increased the target allocation in fixed income from 20 to 25, eliminating long-short equity, so that eliminating a target to long-short equity. It's taking some time to unwind that. We got a pretty significant dollars back here in the month of August, or just the end of July and into August. That 31 million, 31.6 million you see in cash, most of that is redemptions from long-short equity. We still have about 23 million. That's going to be coming back, about 25% of that a quarter for the next several quarters with some of the funds that have gates. So that brought down the equity allocation. Talked to Matt and Gina yesterday about doing some rebalancing, just understanding what the cash needs are for the system. We're redeploying 23 million of that into fixed income and going to hold about 8 million in cash to cover August cash needs, any capital calls. We expect to get another 9.3 million in cash back from long-short equity, either the end of August or the beginning of September, to help cover cash needs for September and October. So getting that rebalance, the fixed income is coming up. It'll be about 22.5% after that rebalancing. You will note a little bit underweight to real estate, as real estate has underperformed. I want to talk a little bit more about that, because while we're underweight the targets relative to peers, that's an area where we look a little bit different. I'm going to talk a little bit about that when we look at the quarter report. Next page, just looking at performance.
I have a question,
Yep.
Jason. Go to the previous page.
Okay.
Did you talk about international development? Did you share about that?
Right, so that was also increased. We, at the beginning of the year, from 10 to 15%. We will, because equities are a little bit overweight there overall, we looked at, from a rebalancing standpoint, should we put some of that in non-US? And at this point, we felt, since we were underweight the overall target to fixed income, let's get that fixed income up. But as we get some more cash back over the next few months, we'll probably be reallocating some to non-US.
Because we're out of the range according to this.
Yeah, as of that last day of the month, I think that's probably moved a little bit.
Okay, thank you.
But thank you for pointing that out. Overall, the portfolio, the message is pretty much the same. On a one-year basis, up 8%, so outperforming your hurdle rate of 7. We're behind the policy index, and the reasons continue to be the same. The policy index is 35% of the policy index is the S&P 500. So despite small cap outperforming large cap in the month of July, on a one-year basis, large cap has outperformed. It's the best performing asset class still through yesterday by about 8%. Large cap's up 16.8% on a trailing 1 year. Small cap's up 5.5%. International's up 8.8%. That 35% in the policy index that is represented by the S&P 500 also includes our allocation to long-short equity and private equity. Over time, long-short equity is going away, but that's been a headwind. And relative to private equity, that 9% in private equity on a one-year basis, up 4.7%. That's really causing that dispersion. Small cap, the two managers, Ernest and Silvercrest, up about 9.5% relative to the benchmark, up 13. That's more on the growth side. Silvercrest, I think, Paul, you asked about Silvercrest last month. In 2023, a big part of their underperformance came from owning the smaller end of the small cap market, and that continues to be the case. They had a strong month, both Ernest and Silvercrest. Longer term, their results look good. Your international managers, we have a similar theme going on in non-US. You're going to hear from both of them next month, Harding Loevner and Lazard. I think I talked about this at last month's meeting. The concentration of performance in the US large cap, really to a handful of stocks, the Magnificent Seven, really seeing the same thing in non-US equities as well, in the EFI benchmark. If we take away the top 5 largest companies in the EFI benchmark, that erases about 6% of returns of the benchmark. And for active managers, it's been a really challenging period to keep up with the cap-weighted benchmarks, where a handful of stocks are leading the way. And we'll hear from those two managers next month. I can tell you, I talked to Harding Loevner Tuesday of this week. One of the other challenges for them was a higher quality orientation in Japan. In the latter part of last year and the first quarter of this year, low quality stocks in Japan rallied significantly. The lowest quality quintile, Harding Loevner, tends to be more quality oriented, growth oriented. Just the first few days of this month, there was a pretty significant unwinding of that low quality benefit as Japan raised rates. Finally, looking at just down to the real estate, your real estate portfolio has done, it's the worst performing asset class, down 3.5% on a one-year basis. As we know, real estate doesn't track equities or fixed income. However, relative to real estate benchmarks, your managers have done a really good job, not down nearly as much. Morgan Stanley Prime Property Fund is the primary largest position in your real estate portfolio. Heavy multifamily and industrial, which has held up much better than office and retail. So looks a lot better than the benchmark. And that's been a positive. However, if we turn to the quarter report, Mary Ellen, just if you have that. If you go to page 20, I'm just going to touch on a few things here. Always like to look at this page because we talk so much in terms of percentages. Dollars actually matter. You pay your benefits in dollars. Looking at that 1 year, so this is July of 23 through the end of June of 2024, the return on investment in the portfolio is about $70.1 million. So net additions, which is effectively is payment of benefits and other expenses, less any contributions that have come in, negative $31 million, which equates to about, over a 12-month period, about $2.5 to $3 million a month in net cash flows. I think we really, when we talked to Gina and Matt, we really are budgeting about 4.5 to 5. Some of that is having enough cash for capital calls for private equity and real estate, so that doesn't leave the portfolio. That's not a net outflow. It's being reallocated in the portfolio. But a $70 million increase from investments. I think always like to point out over that 10-year period, it's pretty remarkable when you see those numbers. The portfolio over the last 10 years has grown by just under $500 million. So pretty significant growth over that 10-year period. If we look at the next page, just to kind of cut out some of the noise, really the objectives of the portfolio are long-term. And while we meet every month and talk about what's going on in the market from month to month, ideally what we're trying to accomplish here is meeting your required rate of return, which is now 7%, over a longer term time horizon. We're trying to do that with a level of risk that we're comfortable with, knowing we have to take some market risk in order to get a 7% return. But we want to be a little bit less than what the broad market would be from a terms of volatility, from terms of sensitivity to direction of the markets, and ideally we want to provide a little protection when markets go down. So by doing that, what that means is we might not be up as much when markets are up. We might not participate in all the upside. Overall, over 5 and 10 years, really meeting those objectives. The 10-year, the very first one, fallen a little bit below. This is a point in time. If we looked at this on a rolling basis, for most quarters, the trailing 10-year return has been above that 7%. But as you think back to 2021, 2022, when we did asset allocation work, when yields were at 1%, equity valuations were high, we were telling you our expectations for this portfolio going forward were more in the 6 to 6.5% range. And that's really, that correction happened in 2023, not to say that there won't be another one, but over time, we would expect that number to jump back up over that 7%. And we've done it with, over a 10-year period, less risk, lower volatility, lower sensitivity, and a little bit better protection in down markets. Now, if you go to page 24, I want to talk about peer groups for a second, because we've really done some work drilling into these peer groups, because as we look at them in the short term, we're seeing some pretty big deviations from not only client portfolios, but the policy index. And I'll just focus you on that 1-year return. So this is the 12-month over here on the right side. Your 12-month return is 8.54% relative to the policy index of 9.8. We've talked a lot about why that dispersion is. It's because the policy index is so much in the S&P 500, and we've got some pieces that aren't large cap. But relative to the peer group, and what we're comparing you to is a public pension peer group in the 87th percentile, and that dispersion is pretty large, 8.5 to 11.23. So we've really drilled down into this peer group to just see what is in there, and it's important to just because they're other public pensions doesn't mean they look like you or they're doing the same thing. In that 1-year period right now, because this is an early meeting in the quarter, there's 270 observations. When I say early meeting in the quarter, as we get further into the month of August, more investors get their data into the database with the peer group. But right now, there's 272 observations. We looked at this at the end of March, the end of December, the end of September, and overall, once the full cycle, or through the full cycle, there's about 450 observations in the public pension peer group. About 50% of those observations are plans under 100 million, and about 70% are plans under 250 million that we're seeing. So you're much bigger than that. Well, why does that matter? Many of those plans, when we look at the asset allocation, drill down on asset allocation, they don't have private equity, they don't have real estate. Typically their US allocation is a little bit higher. So just in this peer group, if you go back to the asset allocation page, go back a couple pages. Yep, right there. The median allocation to US equity, large cap and small cap, is about 45%. Our allocation right now is 35%. And I'd say our allocation, the median, we can't break down between large and small, but I'd say those smaller plans skew heavier to large cap, the best performing asset class. Within the peer group, so we have less of the thing that's done the best right now. Within the peer group, of the 450, only about 25% have private real estate. So your private real estate, and most don't have private real estate because they're smaller plans. The median allocation of those that do is about 9%, and we're at 12% right now. So we have, while your real estate portfolio has done well, very well relative to the real estate benchmark, relative to what we're comparing to here, others don't have that, and it's been the worst performing asset class. So I'm raising these points to say right now, as we look at an 8.5% return, it's still above what we're trying to do. Over time, that tends to even out. If you go back to the next page, back to 24, Mary Ellen. Yep. So you see over a 10-year period, we're right at the median, and I'd say it's come down a bit recently. Peer group data, it's a measure that we look at. More importantly, it's generally if you look really good or really bad in a peer group, we're trying to understand, are we doing something different, and are we okay with what we're doing? As we look at larger plans over $1 billion, this plan looks more like larger plans over $1 billion. Problem with that is there's just not enough observations to be robust. And
So would you say when you're comparing, when you look at this, I like this because at 1 year you look at it and you go, man, we're underperforming. And then I associate risk with reward as well. And then when you look at the 10-year, we're pretty much, it evens out over 10 years. And so could one argue that our structure and our approach is more conservative than
well, I'd go back to those risk pages. The things that are contributing to this right now are really the private market strategies, or the strategies that aren't marked to market on a daily basis. Private equity, real estate, long short equity. When we're looking at the smaller plans in that public fund universe, they're not really doing that. And so they have more of things that are marked daily and more large cap US, which over the last couple of years, that's done the best. So I'd say we're not, I don't like to use the term underperforming the peer group, because we look different than the peer group right now, and here's why.
Right, okay.
But yeah, I mean, we are under the median of the peer group, but they're doing something that the peers for the most part are doing something different, but they're also different in size, different in structure. That's all I had this morning. As I mentioned, next month we'll have both of your international equity managers.
Okay, any questions for Jason? Okay, thank you, sir.
Thank you.
Chair will entertain a motion on item 13A to receive the monthly report. I have a motion and a second. Please record your vote. There you go. Item is approved. And now we will go to item 13B to receive the quarterly investment report. I have a motion and a second. Please record your vote. Item is approved. Okay, at this time we will recess the trust meeting and enter into executive session, and we will be back hopefully shortly. Okay, we will reconvene the trust meeting, and we are back on item 12A3, consider for approval or denial the application of disability in the line of duty for Angela Jones. Based on the information we've received, Chair will entertain a motion for approval of the application. We have a motion and a second. Please record your vote. Item is approved. Now we will go to item 14, comments from board staff and citizens.
I have something, Mr. Chairman. Amy and Carla and I recently, last week, went to Boston and did the CAP training. For those of you on the board that have not been through that, I highly recommend it. One of the things that I would say that when you go through and they tell you about best practices and how to do things, it really made me just so proud to be a part of the City of Oklahoma City and our ERS system, that we do things the right way. And I want to commend staff for the way they administer it. I want to commend Jason for his work, what he does, and it was really a good thing to affirm. There's always some things we can tweak and look at, and I'll be bringing those up soon. But it really made me, and that was kind of my theme. I kept telling Carla and Amy how as we would learn more, I would just say we're so blessed to be in Oklahoma City. We're so blessed to be in Oklahoma City, and I just wanted to share that with the group. And if you haven't been able to attend the conference, I highly recommend it. It's a good educational. I noticed it's on Gina. We approved Gina to go to the next one in November, but I just wanted to share that with y'all. Thank you.
Yeah. Chair, if I could, I was just going to echo to that comment that Brent had, or Trustee Bryant. But it was very helpful for us. One, to go through is, we obviously understand our fiduciary responsibility, but really go in and have a lot more detailed understanding of what that responsibility means, and then how to make sure that we're protecting all of our participants right to their pension when they were able to retire. And so I just really commend all of the staff and the board and those that have had the great legacy to get us where we are today. But and it's obviously our responsibility to carry that forward. But I really appreciate the board supporting us to be able to go, and I also recommend that anyone that has not been to be able to go in the future.
Okay. I will just throw in that if you're planning to attend the Public Funds Trustee Education Conference at the end of next month in Tulsa, and you've not made your arrangements or your hotel reservations yet, that you do so. And if you need help with that, you can contact Gina and she'll get you straightened out. So with that, we are adjourned at 10:52. Thank you.